let's take a look at the market at a glance here. Yeah, so what stands out to me right now is a lot more inventory, a lot more homes sold recently, and still a lot of supply. So you ready to get into it? We good?
Yeah, let's do it.
All right. So what do you think, Danny? Run the numbers down for me.
Yeah, so I mean, you just talked through a couple of the big ones on the market at a glance page there, and let's dig into these additional slides. So we've got homes sold. You see that we came in up 24% month over month. You see the big rebound there off of January, up to almost 1,500 homes sold in the month of February, shortest month of the year, right? And that is up also 5% year over year. So you can see that there's the rebound every year. Go all the way back to the left side of the page. We know that things always cool off in the winter. January is typically the worst month, and then things start to kind of spring back to life, pun intended, right, for February, and that's what we're seeing here. So this is encouraging. You mentioned the current inventory is 2,659 active homes in our Central Ohio area that we look at. That is down 6% month over month, but it's up 11% year over year, which I think is interesting. And of course, the one other notable thing there is you mentioned months of supply, 1.8 months of supply, which is a little bit better than where we were last month. So things are going a little more quickly, but still, I would say things are probably more in the favor of buyers now than they have been in recent memory. I think you'd probably agree with that. But that's kind of what's going on with homes sold.
Yeah, and that's a more healthy number for months of supply that we've seen. This other chart, the next chart, average sold price, it's also probably good news for buyers. I think this is a temporary situation, but we're actually down month over month. If you want to run details, Danny, that's pretty surprising.
Yeah, and you can see that both the average list price, which is there in the blue, and the average sold price, they both took a dip this month. You can see the spread there between those two lines over the last 4 or 5 months has really widened as we came out of the summer where things were probably the hottest for the year. And at that point, you really started to see those lines separate. So I think at some point, sellers had to just reckon with the fact that they were seeing longer days on market. Maybe some of the list prices that they were seeing that were going quickly in the summer just wasn't happening anymore. So they had to start to dial those down a little bit just to make sure that they got the attention that they wanted for their homes as soon as they hit the market. And you see that, again, that came down, but so did the average sale price. So I guess those things definitely play together. But at some point, we'd expect the market to heat up and for those lines to start to converge a little bit closer together. But that's probably a few months off. If you look at last year, things didn't really pick up until March, April, and then they really went up from there.
Yeah, and the most important number for sellers that we see every time, on average, houses are selling for $14,000 more than they did this time last year. For buyers that are waiting, you shouldn't probably wait forever because that number will keep going up over time. Consistently, that's been the case since we've run numbers, I think, pretty consistently over the long term overall real estate.
Real quick on that, I mean, if you look all the way back to the left here, and then you see what happened in January of going into 2025 in January, that was almost the lowest point, right? January and February in terms of the list price and then the sold prices. And then, boy, they're up from there. And this is the same exact pattern we see every single year. It's an echo, but it's not exactly the same, right? So things did come back down, but they did not go as low as they were in the previous January. And so again, that's your message to the buyers, right? Is, this is your time to be out there looking for opportunities and deals. This is likely as good as it's going to get for a little bit here.
Yeah, and average price right now is $390 in Central Ohio. In June of last year, it was closer to the $420, $425 mark. So that's a big spread. That's a big difference. Just keep that in mind. Seasonality is a real thing when you're shopping. But again, to the buyer's advantage, the percent over and under asking is shrinking as far as the seller's market goes, meaning fewer houses are going for a lot over asking, not none, but fewer. But we'll go through the details here.
Yeah, and we've got some numbers there. That green section is anything that's sold well over the asking price, which means 5% or more than the asking price. And you can see that green line expands kind of when the market is hot, right? That's where people are really bidding. There's probably multiple offers. Things are going over asking more frequently and significantly over asking more frequently. And then the other side of that that column is the orange, which is things that went more than 5% below the asking price, right? You can see that that's tapered off over January, which is good. That's a normal kind of rebound again that we see as the market starts to pick up again, but it's not quite as low as it was last year. So we're going to keep an eye on that. This is still a great time because you see that big blue section there in the middle. That's almost 2/3 of all the homes sold within plus or minus 5% of their asking price. And again, you had 31% last month that went 5% or more below their asking price. So again, you're talking about your ability to get a deal. It's probably about as good as it's going to get right now.
Yeah, it's increasing a lot. Days in the market also increased a lot, not over last month, but overall over the past 6 months, it's quadruple or more than that. And we regard the median as the better indicator, disregards the outliers typically. It's 27 days in the market, leading to a more balanced market typically. And that's way over where we were this time last year.
Yeah, and that we're just going to continue to keep an eye on that. I mean, I think that was one of the consistent things over these last 6 to 8 months is we were just saying, yeah, this is the normal trend, but wow, we're 4 or 5 or 6 more days more than this time last year, and it's just continued to go up. So yeah, that's a big change, almost twice as much.
Yeah, and a little surprisingly, price reductions are actually down from last month. We expect those to go down seasonally, but we typically don't see the big difference until market heats up. Market is hot. Market has heated up completely. If you are not school restricted, if that makes sense, it's not a bad time to sell. The spring market is here already, and we only expect to get hotter, but only 41% with price reduction. That's a little surprising given where we were last year.
Yeah, and you can see we kind of go over that peak every year, and hopefully we're over it for 2026, and hopefully things continue to improve from that point forward.
Right, and here's the new one. Here's a new graph for us too. This is a better graph. I like this quite a lot more. This is the historical graph showing where we are for the 30-year fixed mortgage rates on average. A lot of news hit this past month. We were below 6%. That's 5.99%. I do have to say that's not a real rate. That's not 5.99 is something you're not going to go and get. They move by eighths. So most people got 6. Some people got 5 7/8 or 5.825. That's or 5.875. Excuse me. That's pretty good. I think that the news that the rates are in the 5s technically is what everybody's going for right now. Drives a little more comfort in the market, and everyone's getting used to this higher rate environment anyway. I like this one because it shows, obviously it's an anomaly, but it shows the rates all the way up to 18% at one point. That was reality.
Right. So this goes back as far as, this is from the Fred data. And this is just a direct lift of their chart, all that data they've been tracking for 30-year fixed mortgage rates, week over week over week for all those years back to the 70s. And yeah, you can see, I think this does put it into a much better context that where we are now, okay, historically is actually pretty good. It's not as good as maybe the most recent, decade or so, but boy, we've kind of gone over the top there, and things are trending in the right direction. 63 basis points year over year is pretty significant, right? When you look at affordability, and 11 basis points improved month over month is definitely a sign of some change. So this is great. Hopefully that continues to trend in a direction that makes affordability easier for buyers, because I think that also is going to unlock demand that's just going to help get the market going again, right? We're reaching a point of probably pretty good balance, but there are still a lot of people that are just kind of rate locked that are on the sidelines, and they're just holding that inventory up.
Mm-hmm. That's been the cause of our low inventory forever. And obviously 101 for fundamentals is if there's no supply, demand is going to be higher. And that's what we continue to see. We're starting to see demand softening, or supply rather, softening up. we'll see. We'll continue to track it. We're always pulling numbers. Danny, thanks for always doing that.